we go, we have a couple questions here on Lemonade. Panda Tears 420, and this is a great like mindset question, not just on Lemonade. My cost basis for Lemonade is $150. I hear you that it's a bargain, but seeing all that red makes it hard to invest more. Understandable. I wish they would get their loss ratio down. So on the loss ratio, Lemonade's loss ratio is 77% in the most recent quarter. Their target is under 75%. They're not too far off, but in the insurance business, those small percentage points make a big difference. So I agree. I'd like to see them get their loss ratio down. I think it's the business scales that'll get a little bit more efficient. But what do you guys have to say to somebody who bought in at a much higher share price and thinks it's a bargain, but is having a tough time parting with any more cash?
I think you look at the results of the business, right? The thesis seems to be working out. They're adding customers at an enormous rate. Customers are giving them more money. They're growing premiums. They're launching new products. They're bringing those products to market successfully. I think it's easy to get caught up in that, don't dollar cost average down, dollar cost average up, right? Winning stocks continue to go up. But really winning stocks or the stocks that go up, that's a signal to find out if the business is executing well. The thesis isn't broken here. I mean, I think that's the biggest thing, right? It's just how the market is valuing the company has changed, but the thesis is playing out exactly as we should have expected.
Yeah, I think, from a mindset perspective, it's always helpful, and I know it may be too late for this particular viewer, but it's always helpful to kind of know in advance what your rationale is going to be when it comes time to make purchase number 2 of a stock. If you always intended to make repeat purchases of Lemonade, then I don't see anything in the actual fundamental results that would change your mind about that. If you didn't necessarily know how you were going to deploy additional money, you were just kind of making that first purchase and calling it good, and then you kind of see where things were, then I could see going in a number of different directions with it, just kind of depending on, where things are. If you have other stocks that you're more excited about, you have more conviction about, you really want to hold back and watch Lemonade kind of make good on some of its potential before you start investing additional capital. Hey, I totally understand that. And that's a perfectly acceptable way to go. But if you're more of a value investor, you like to go against the grain. And when you see share prices, kind of what you see is unreasonably reflecting a discount that you think the company is going to be able to overcome, then by all means, take advantage of it when you get a chance.